Here we are. Okay, let's see here. I'm gonna have to pull up the. Oh god, I don't have my trading view loaded up here. Okay, let's see. Where are you, trading view? Yeah, okay. Okay, let's load up this bad boy. Set this all up. All right. Where did gold ended up going here? Oh yeah, okay. Let's have a look. Not liking this structure here. This is going to be ranging for quite some time. Yeah. Okay. Yeah, I got way too many things going on here. You gotta move this guy over here. Yeah, let's go here. Leave that there. So pretty much just to track what I'm doing here. It's 5:30. There's no movement. Gold market's still closed. Nothing should be opened unless you're trading the pre-market. I'm not that type of guy to have access to that. It's very expensive to trade in the pre-market. And I'm not going to because it's not really fluid compared to, the regular session. But we're going to be transitioning over to that where it's going to be 24-hour trading. It's going to happen. It's only a matter of time before they start putting those legislation in and seeing how that's going to work. But for now, I'm just going to stick with just trading during the markets. Right now, gold lately, I've been trading gold since when it was $800 a share back in 2008, right? Now we're trading at the 4,189. That's when the last price closed. But on my broker here, it's showing 4,190. Depending on where you're trading, it's just a couple bucks difference. But when it comes to a 1% move on gold now, that's like a $40 move compared to a 1% move on gold, which was an $8 move back in 2008. It's going to be different. So now I got to trade it with like a smaller account size because, again, most of my wealth is going to be focusing on real estate going into 2026. Trading is something that I just want to, get that itch out of me because I still look at the charts. I still look at seeing setups, and I'm just telling myself, oh, it's gonna sell. Oh, it's gonna rally, and I kind of want to get on that action, right? So I'm going to trade with a small account. Yes, I'm just starting out. You'll see the account size is 2,000 right now, and I'm going to be trading with a 0.02 lot. And I think my full scale, I might go as high as like maybe a 0.14, maybe, or 0.16 lot size, just so that I can hold potentially like a 300 to 400 pip like drawdown. That's only a $30 or $40 move, which is only, barely less than 2%. If you cannot handle a drawdown of a 2% drop in gold, then you're going to have to resize it down, or unless you're able to really nail down your entry points and scalp and really try and time the bottoms and the tops, by all means, that's you. If it works out for you, great. For me, I noticed a lot of my trades and everything, if I had a leeway of like roughly around 400 to 500 pip drawdowns and everything, it usually swings in my favor, especially if you're looking on the daily chart right here, guys. Daily chart, bullish, right? You'll get these pullbacks and everything, but these multi-year momentum that we're getting, okay? You don't have a single year when it wiped out a previous year other than this area here, which is back in 2020 to 2022. This huge drop that happened, we all know is because of margin calls. It's all due to margin calls, right? So when brokers are liquidating everyone's portfolio because it's a mix, right? They don't just have gold in their account. They have stocks and equities and everything. When you have a 30% drop in the equities market and everything, there's a lot of margin calls that's happening. So gold was affected, defensive stocks were affected. Nothing was safe, right? So I wouldn't count that. But overall, when you're trading gold, right, it is bullish as hell. So for now, I'm just looking for buys, and that's why I'm willing to hold down a 500 pip drawdown if it's as long as it's a buy position, especially if we're going into Wednesday, the FOMC. Yes, they want to, say what they got to say to wipe out, some of the buyers right now that have really tight stop losses, and they want to get, milk that liquidity in order to push it further up. By all means, that's fine. But my trades, being able to hold a 500 pip drawdown, it should be okay as long as I'm doing the same thing like you guys, which is timing the bottom, right? I might be off by like 100 pips. That's $10. But on a 0.02. If I was trading with this account size of 2,000, I'll probably be taking like a 0.5 lot, and a 100 pip move is like $500 off of my account. Is it 500? Yeah, about that'll be $500. That's 25% of my account being wiped out on a 100 pip move against me. And gold does move like that. Like we're ranging right now. If you want to see gold, we're easily ranging 150 pips, right? Let's see here. So during this Asian session right here, if you look at the my 30-minute chart right here, I forget which candle. I think it was this candle right here during the Asian market. You'll see that huge spike up and spike down from, what is it, 4192 to 4209. 421. Yeah, that's easily 130 pips right there, right? And it kept on going up, and it ranged the entire Asian market, and including the Euro market. And finally, in the New York, London crossover, it finally made a move to push it down. But even this move, yes, if you're timing it to grab, 250, 300 pip move, right? Sure, that's enough for you to do something about it. But I'm just trying to get that whole gambling itch out of me by just trading on such a small account. Like, I'm still scaling out my equity portfolio. I'm still scaling out the real estate portfolio. I'm hoping that my partners can come online right now. Let me see here so that we can discuss other things here. Hold on here, analytics. Yeah, so we're just waiting. So yeah, like my partners are not coming on here. So we're going to just see as to what I can do here. But we're going to wait for around 6 o'clock to see how this candle moves. Hopefully it spikes down enough. Like it really is testing the 4,200. I believe this little move right here is just testing this overall support. I think it's like a $25 support line here. So 4163 to 4,200. So yeah, like $37. Yeah, okay. So this is a big like support area where it needs to break all this for it to do a quick dip down to maybe the 4150. But we all know that like gold is not going to stay low forever. Like we just had an all-time high, and it did pull back like 400 pips or $400. Sorry, so that's 4,000 pips. Not a big deal, right? It recovered. That whole entire move that happened, recovered. Look at that. Look at this move. It was pretty messy, but as long as you can hold it, it came back. But anyways, so for now, another thing I got to be looking into is the cash damming. So let me see. How can I get this? Let me just double check here. Let me me see if I can get the. Yeah, we're gonna be looking at some of the deals here on real estate. Oh, okay. Let's see here. So some of you might be, curious as to how I look for deals and everything. This is not the best way of looking for deals, as I'm trying to figure out how to scale out the real estate side of things in the US. And Zillow is a good tool for us when looking in the Cleveland market. Oh, hold on here. Hmm. Yes. Gonna see if I can get some people on for my partners here. 1 second here. Start a video chat. Stream with? Do I want to stream this? I'm just gonna do a video chat. Let's go here. Yeah, allow access. Bum 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 bum. Da-da-da. Okay, how can I add Telegram? What? No, allow to speak. Arun, I can't hear you.
Hello?
Perfect. Okay. I'm gonna if you can use your live stream right now just to see if we can hear you on my stream, because I have to reset everything on my OBS studios here. So let me see here. Let me see.
Let me go to the live stream.
Audio input capture. No. Audio output capture. Is that it? I don't think so. Hold on. Is it media source? Video capture, Windows capture.
Hey, Dennis, I think...
What's up?
I think I can hear myself on the YouTube thing.
You can or
It's
cannot?
a bit delayed, but yeah.
Oh, you can't hear yourself?
I can, but yeah, I can hear myself. I just said, but it's a bit delayed.
Okay, that's fine. Just mute on your end. I just want to make sure that like whoever's tuning in, or if I need to like listen back, that I have the recording just to listen back. That's all. So awesome.
So should I just mute right now?
Mute the YouTube for you, because you and I are talking in real time with the Telegram here.
Okay, I guess I'll just close the YouTube then.
Not close it, just mute it, so that way it shows that there's someone actually on, just for the algorithm.
Okay, how the fuck do I mean, sorry, how do I
Oh, I'm gonna be demonetized now.
No, the thing is, I'm on my phone. I literally woke up and saw your message.
Oh, okay. Okay, good. Because you're here. Because like I just read about cash damming, and that's very important for me, and it's going to be soon for you potentially, but it's going to be mainly for me and I guess Shelly here. Bum, bum.
Okay, I don't know how to mute just the YouTube, and because when I turn my volume off, even my call gets muted.
Really? But you have your laptop with you?
No, that's the thing. I have a brand new laptop, which is still in the box.
Oh, okay,
So,
okay. But where you're
yeah.
at right now, there's no there's no computer where you're at right now, right?
I could probably go find another phone.
Nope, nope, nope,
Maybe
nope, nope, nope. Too much work. Okay, so just close the YouTube and then just stay on the on the Telegram.
right. Yeah. Guess I'll do that.
Yeah, that's fine. I was trying to kill two birds with one stone here.
Yeah. I mean, next time I'll have my laptop ready. So
Yeah. This is all beta here, just to see how we'll get things going. I'm not. I don't even know how I look on the actual stream here. So
mm.
a little
So
bit of
yeah,
delay.
were we talking about cache damming? What does that mean?
So so let's just go with the. Okay, you know what? Since you're here, I'm going to use my tablet now. Perfect. So let's get the tablet out. Let's see. Where's the flow?
But when you used to stream before, right?
Mm-hmm.
Like before you took the break, like I could see a screen in the Telegram itself, not on the YouTube, but in the Telegram.
Oh yeah, that's right. I gotta set that up. 1 second. I have to share the screen on here. 1 second here. Settings. Couldn't enable camera. Okay, how do I share my screen here, guys? Not settings. Okay, buddy. Is this too much? Can I not do this? Couldn't enable another app. Maybe you were already using it. Try closing the app first. No, man. Like, I'm pretty sure I'm able to share my screen here.
I see something popping up, but it closes fast.
Oh, here we go. Share screen. La 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 la. 1 second here. 1 second. Samsung Flow. Let me just connect my Samsung Flow first so that you can see. Smart View. Perfect. All right. So for you, you're probably seeing the share screen. Samsung Flow, share screen. Boom. All right, you see it, right?
Okay. Yeah, I see it.
Okay, good. So, but I gotta change it on my OBS on the stream here. 1 second. Oh, my camera froze again. Wow. Yep, there's something wrong with this setting here. Okay. I'm always gonna have to be mindful of looking at the camera and the stream, and I'm like, I can't fix this anymore. I just can't believe I caught my camera like freezing because I think I need to upgrade my computer. I guess it's not handling everything I got going. I got MT5 open. I got 4 browsers screen open. I got OBS open. I got the Samsung app open so you can see the screen. I got Telegram opened. I got the Telegram call opened. So I got quite a bit.
Maybe try not sharing the screen. Maybe that will help.
No, it's like I'm pretty sure it's gonna freeze by me having like, let me just see here. What's my GPU or my CPU performing right now? So CPU is fine. It's just my GPU. It's like at 40% right now. 42%. Yeah, but my memory is barely being touched. Like my 64 gigs of RAM. I don't know if that's what's causing it, but it's most likely my GPU that's freezing. But okay, so what was I saying here? So normally, right? This is going to be you.
Yeah.
Right? You're making $70,000. And let's just say that for math purposes, I'll just say you're effective tax rate is 50%,
Okay.
right? So out of this, you're going to be paying under the taxes. It's going to be 35 grand of your income gone towards taxes, right?
Yeah. Mm-hmm.
So based on Canadian tax laws, if you're using, if you're investing into investments, whether it be real estate or your own personal business and everything, and you happen to be using, let's just say, a credit card, so it's a credit card, and you decide to invest $10,000 of credit into a business, right? But this is your
Yeah.
personal, this is
Mm-hmm.
personal,
Yeah.
right? And let's just say the interest rate, make it nice and easy, math. Let's just say it's 50% is the interest, right? So that means every year, if you hold the 10K for an entire year, your interest is going to be 5 grand, right?
Yeah.
This
Mm-hmm.
5 grand, you can actually write it against your personal income. So you really don't make 70,000, you're actually making 65,000. Which means it's only 50% tax on the 65, which means you're going to get a tax credit when you do your income taxes of whatever 50% of 5 grand is. So you're going to get back $2,500 as an income tax in this example, right? So
Yeah. Okay.
so that's normally if you're like, you know what, I want to start up like a snow plowing business and everything, but I gotta get a truck, I gotta get all my tools and my equipment and everything, but I don't have the cash for it. But I need that right now in order to take advantage of this season when it comes to snow plowing. So you're not gonna wait for the cash, you're gonna put it on a credit card and you're like, you know what, I'm gonna make more money trying to, make money in this season than wait until I have the money to buy a truck, a snow plow, and all the tools and everything. I'm going to spend it on credit right now. But the CRA is allowing you to invest in your business. And if you're using credit to do so, then they're like, we're going to allow you to write that interest off on your personal income because you're trying to invest and I guess build the economy, because eventually you're going to grow and you're going to hire people and everything, and you're going to contribute into the local economy. I think that's the idea or the reason why they're allowing you to do this. So that makes sense. So now, where's my eraser? Let's just erase this, okay? Can I make my eraser bigger? Let me see here. Yeah. Oh God, no, I can't. Yo,
Make a new page, I guess.
No. I guess it's good on stream of how I'm like erasing all this. Let's see here. I can't even tell if I actually have people watching right now. Okay, so now we understand that like the interest that's charged on your credit card, lines of credit, and everything that's being held in your personal name, as long as you're investing it, the interest portion can be written off against your personal income. Does it make sense?
Yeah.
Okay. So let's apply this to real estate. Okay. This is what I understood about cash damming, right? So for a guy like me who has a primary residence, like I live in my own home. Right? Why do I hear myself from time to time? Is that you, Jorun? Or is that me? Am I on speaker?
Yeah, you're on speaker.
Okay. So, just for the next time, like you'll need to get like some headphones, because your speaker from time to time it will cancel out the noise canceling and it'll actually pick up on the speaker.
Okay.
Yeah. So if you're about to say something or there's something in the background is playing on your end and your noise canceling cancels out like on the speaker, Yes. Yeah. I just heard myself. Wow.
Okay, hold on. I have a headphone.
Oh, you do? Okay. No worries. Don't mute. Don't mute. Why is it so dirty, this pen tip? Wow. Okay. So in real estate, this is what you and I have. Oh, so whoops.
Okay, I'm on headset now.
Nice. So we did this. 160K is what we purchased. And let's just say that our carrying cost, it was our monthly expenses with the mortgage and everything is $2,000 a month, right? But our
Okay.
rent was like 37. So this is our
Yeah.
rent.
Mm-hmm.
Okay. Normally, what we would do is that we take our rent, we minus our monthly expense. You know, this is reverse, right? So we should be sitting with $1,700, right? Every single month,
Yeah.
right? And then from there, we would divvy up to us, right? The partners.
Mm-hmm.
This is how it looked like. Depending on the shares, right? Like 85% for me, 10 for you, right? And 5 for Shelly, right? This is how
Yeah.
it would look like. But because this money is flowing out of the LLC that we have, there's going to be like taxations that's going to create here. But ignoring yourself, all right? Ignoring yourself. And let's just say that in a normal event, if this was all you, 100% is you, and you'll be flowing the money back to you, the $1,700 back to you like that. But then now that's considered passive income, and CRA views passive income on the highest tax bracket, or you might be able to, I think they include this in as part of your overall income, and you're gonna be paying taxes on the 1,700, right? But instead, cash damming, if you were able to research it a little bit, you know what? Let me see if I can actually new canvas, discard. Yeah. Oh, perfect. That's so much faster. Okay. We do the house again, right? Same example, $2,000 a month for expense, $3,700 for a rent. Right, this is our rent minus that, $1,700. Right.
Mm-hmm.
What we'd be doing is this. So you have a line of credit. So a line of credit, right? The line of credit would actually pay the $2,000. So money's flowing that way, right? It's flowing this way to pay the $2,000. So we're actually investing an additional $2,000 every single month to pay for the monthly expenses on the property, right?
Okay.
Then the line of credit now has a deficit of $2,000, and let's just say the interest rate is again like just 10%, right? So per year, we're going to be charged $200 of interest per year if we hold just the $2,000, right?
Yeah.
And we would take the $3,700. We'll just take the difference of $2,000, I think, and it's just we would pay off the line of credit. Does that make sense?
When? Like at the end of the year or at the end of each month?
I don't know. That's why I want to talk to an accountant just to see what's the proper way of I guess structuring this, or how to bookkeep this correctly, so that when we do get audited and they want paperwork and everything, it's like, here it all is. This is perfectly legal. This is what we're doing. But essentially what we're doing is that we're paying the monthly expense that we see here using the line of credit. The line of credit generates like interest that we have to pay, right? So we can write off the interest against our personal income. And because the interest which we're going to pay it through taxes here anyways, right? We were going to lose taxes here. So let's just say like the tax that we're going to lose here is 25%. However, we flow it out. We flow it back out to all three of us, right? We're going to pay 25% on the 1,700. So what's 25% of 1,700? Roughly. Oh, where's my calculator? 1,700 multiplied by 25. So we're gonna be losing $425. Yeah, $425 just per payment towards taxes, right? But if we can somehow convert our entire rent into an expense and right against our personal income, we're actually going to be getting a credit of potentially $425 back on our income. But we have to structure this correctly where it makes sense for all of us. Sorry.
But you're still paying interest for the line of credit, right?
But the line of credit interest is this, right? It's like, let's just say it's $200. So like, let's just say it's $2,400 a year. Let's just say we managed to rack up $2,400 of interest per year, right? And if your personal income is $70,000, well, because of this $2,400, you're actually going to be, that's going to be your effective income, but your job. So like, right? Like
think of it this way. So if you pay the 2,000 expense from the line of credit, that means your effective monthly income is 3,700, not 1,700 anymore.
Yeah. But
right.
Fuck, I forgot. Hold on here. Let me just do a new canvas here. Discard new. Okay. So the whole point is that so if our rent is $3,700 a month, but then our monthly expense is $200 a month. So let's just label this. This is rent, and this is an expense. Long day. So for anyone that's going to be watching this and be judging me, like, how can you not figure this cash damming? I'm like, guys, still figuring all this out while I'm working a full-time job, while managing a family and everything, and while managing everyone's expectation in this investment group. Lots of things going. So if anyone's going to be judging me on this, then they can just kiss my ass. So right now, $3,700 the rent, $12,000, and our essential, like, positive cash flow is around $1,700. But the strategy here is to use a line of credit to pay for this entirely, so that it can be transferred onto the line of credit as debt. And because you can write the $2,000 debt, you can only write off the interest as part of your income, right? And then you use the $1,700. Oh, that's the reason why. That's right. It's a HELOC. That's right. So you take the $1,700 and you pay your mortgage.
Right.
Yeah, it goes onto the mortgage. So as your mortgage balance goes down, your line of credit on the house goes up, right? Like the actual limit. And you're just effectively trying to transfer the $2,000 into your line of credit every single month, but you don't pay it. You take the whole entire $3,700 and you throw it onto your mortgage directly. And then the mortgage balance goes down.
Does that mean you're borrowing 2,000 and paying 1,700 at the same time?
That's the thing. This is why I want everyone to just Google what cash damming is, because apparently it can work with a regular line of credit for you guys. Because the whole point is that everyone's on a salary based job. Like for us, it's the T4 income, right? We got a T4 at the end of the year. And our job is that when, where your company is and where my company is, they're going to send us a T4 where we made $70,000 that year or 80,000, whatever. But if we can show to the government that like, actually, we paid out almost $5,000 of interest on our own personal investments. So that means that our income tax is going to be based on 65,000 and we're going to get a big cash return. Now it's not too much, like not too important for you right now. It's more important for someone like me who owns their primary residence, and something that's more important for Shelly because she has a primary residence as well. But it's something that you want to keep in mind as to when we generate enough cash coming in, and let's just say you want to get in on your own primary residence up here in Ontario, wherever it is, then this is where we're going to structure this as well. Because apparently we have to do this in a holding corp, like a holding corp company. And we either have to set it here where, the whole split of 85%, 10% and 5%, or it's at the LLC level where it's 85%, 10 and 5, and the LLC. Oh my God, I'm gonna have to freaking. Yeah. So there's two ways out of the hold company. It's going to be the split three ways like that, or it's the holding company and it owns the LLC, right? And then from there, it's split into three, right? So there's you, me, and Shelly, right? And then from the LLC, because you own this, let's just say you're 10%, 5%, you guys can decide if you want to flow it back to you guys up here in Canada as your personal name, which I doubt you're going to do that, or you have your own individual holding company where you're going to be holding not just like ownership shares inside of this LLC here. You can be holding a stock portfolio there, right? So you can be owning a holding corp TFSA if that's a legal structure. So the holding company for you will hold not just the real estate portion, but can hold everything else. This might be your setup for you guys individually. Or it can be the holding corp where we have our own percentage here, which will own several LLCs, right? But we got to figure out what to do, because I'm going to be doing this right away because of the whole potential cash damming on my principal residence. Like if I can flow back, 85%, the $3,700, if I can flow back 85% of this back and just pay down my mortgage, right? Paying this down and just keep on increasing the line of credit limit because of the bigger payment. I'll be saving interest on the mortgage itself, right? At the same time, I'm creating whatever interest that I'm paying on the line of credit. It's already offset by the interest I'm saving on the mortgage, but I'm going to get more of it back because my effective income on my T4 is actually lower. So I'm going to be getting a bigger tax return. So, yeah, I don't understand this 100% yet because I kind of watched a lot of videos when I'm half asleep. So I just got to keep on talking about it and figuring it out.
Right. But even if you bring that 85% of 3,700, once it comes out of the account in the US, isn't it considered you're withdrawing and you have to pay tax? It doesn't matter if you're paying it towards mortgage, credit card, or to your checking account.
That's the thing, though. When the money flows back to a holding corporation, right? From there, we have to figure out how to flow it back to us individually. whether it be a
All right.
one-time dividend, all that stuff. That's fine. It's going to be a complicated setup at first, but once we get it set up and everything, and we understand what we need to record and how we're going to do it, it's all going to make sense.
Mhm.
It just gets a
Right.
little bit complicated now that there's two other people involved, but it should be all the same, right?
Mhm.
Hold on, let me see this. Okay, the market is moving. Uh-oh.
Did you figure out about the check you got? Because you said you were not able to cash it.
Nope. I still have to make time to call the bank and figure out what documentation. I asked the people in the group. They said that they're going to want proof of a utility bill that the LLC that we have actually has an actual residence, like an actual physical address. So I got to figure out if I can take a photocopied online bill, because the LLC it does have like a gas bill, electricity bill, a water bill, but I'm not receiving the paperback billing on that. It's just all online banking or online billing. So I'm hoping that they can take it. And then, because I'm not willing to make multiple trips when I go down to the U.S., because I'm going to be going to like Buffalo, set up the bank account, maybe at Chase Banking, and then and hopefully I can deposit the cash that same day. But TD up here, they're like, yeah, even if you can open up the LLC and you have the paperwork to open up an LLC up here in Canada, the lady was like, we're not going to be able to cash that check anyways, because that's after the date of when you receive the check. I'm like, that doesn't make any sense. Like, why are you restricting me from depositing a check even though it predates the account opening of my business account up here in Canada? It's a stupid policy. So even if I could open up a LLC account up here, they won't even deposit the check because it's before when the account is open. So it's stupid.
Oh my God.
Yeah.
Okay.
Like, hold on, let me show you here. Can I show you this? Without revealing too much information. No, it's not even on the statement. Never mind. Yeah, the check is it's in the car, which I gotta bring it back in. But yeah. What time is it over there in India right now? It's 8 o'clock in the morning?
No, it's 4:45 a.m.
Isn't it not 14 hours ahead of us?
No, it's like so you are 9.5 hours behind. Sorry, 10.5 hours behind my time. Yeah, I'm 10 hours ahead of your time.
Oh.
That's why I said I just woke up and saw your message.
But I didn't expect you to be on here. Hold on, why can I not change the video or the screen that I'm sharing? I have to continuously do this? Oh my goodness.
It's gone now.
Yeah, I'm just changing it up. Hold on here. Screen 2, this guy. Boom. You can see this screen, right?
Yeah.
Oh yeah. This is crazy. And my video froze again. Hold on here. Oh my God. There. Okay, everyone. Hopefully that works. This whole video screen delay is it's gonna get very annoying. Okay. All right. So, yeah, if only you were. So, PayPal is the next play, right?
Okay.
Did you get into PayPal yet, or?
Gonna pull the trigger tomorrow because I made the actual additional deposit Sunday. So, but I checked today after the closing just to see where my positions are at, and I noticed that like the deposit hit the account. I think what they did was that they credited my account while the money from my TD account goes into the brokering, like the brokerage account.
Mm-hmm.
Yeah. So, what is he saying? What does Miles say? Hold the ball for 1 second and score that. It's flag football. What's the point of contact? I'm glad the pros in New York agreed with me because of the play being called not a touchdown. The Steelers won the game. Oh, okay. Okay, yeah. So PayPal is the reason why is the play based on everyone's due diligence, and how much it came down. So the reason why PayPal was pretty much taking a big hit in the previous, I guess, couple of years is because of Apple Pay, Google Wallet, even Samsung Wallet.
Mm-hmm.
They're technically eating a piece of PayPal's business because behind those services, they're running their own merchant services. So it's kind of like if you have Moneris or any of the merchant provider like accounts, and you create a layer of like a software on top of that, which is i.e. the Google Wallet or Apple Pay wallet and all that stuff, and you're slapping in your own small little fee on top of that, it's actually going against PayPal's business, right? Mm-hmm. So that's why PayPal have seen a big drop, because they're seeing a drop in users. So this is the first time ever since inception of PayPal where their user base has declined. Like there's people actually deactivated their PayPal account.
Okay.
But apparently this other guy that was doing their due diligence, they said that on the earnings call and their guidance, who's calling here? British Columbia. Who? I don't know who the hell is this in British Columbia. Okay, don't know who that is. Hold on. Yeah, so I better mute this. That was freaking loud. Okay, so so PayPal, based on the turnaround play that the executives are all saying, they're expecting a growth in 2026, and they're actually showcasing some pretty good growth right now. I think a lot of people got fed up as to how expensive PayPal has gotten. So from withdrawing money to transferring money to just letting your money sit, from the merchant standpoint, if they accept PayPal on their website and all that stuff, I don't know if you know about this, but as a business owner, let's just say that you load up the shopping cart on the website. So you have like $200 worth of merchandise. Mm-hmm. And let's just say that you press like pay. Yeah. And then 1 second afterwards, you're like, oh, you know what? I just remembered I already bought one of the items and everything. I'm gonna reach out to the business and be like, yo, could you just cancel one item on there? Right? Mm-hmm. But let's just do the extreme. Let's just say they want to cancel the order right after, the whole entire $200 order. You cancel, PayPal will still keep the % fee from the business. Even though it's getting canceled, nothing was shipped out, no shipping labels, no nothing. PayPal is still going to keep their fee. And that's why a lot of these businesses are like, we're no longer accepting you, because like that's ludicrous. You guys didn't do anything. You guys didn't lift a finger. Why are you guys taking a % fee? Now there is a transaction fee where it's like, okay, we still did the transaction. That's still going to cost you 50 cents because we still process the payment, right? Businesses are going to be like, yeah, that's part of the business. No problem. You can take it. But why are you going to eat? Let's just say their fee is 2.9%. Why are you going to eat almost $5 off of a $200 order plus your 50-cent fee on top of the $5 because they're eating the percentage plus the fixed fee for processing the payment, right? So a lot of these businesses are saying, no, we're no longer accepting PayPal. I don't care how big you are and everything. You're way too expensive for a person like me. I might as well go with my regular like merchant account where I have a physical store and they're offering me the e-commerce solution at the same rate that I'm paying in store. I don't need to use PayPal, and PayPal has been leveraging that, like, we're a global brand, we have global reach, we make it very easy for customers to use our PayPal services, blah 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 blah. And now Apple is stepping into, like, if you shop on your iPhone and you decide to go onto a lot of these websites and you want to use your Apple Pay, apparently, like they can somehow use your Apple Pay to pay.
Yeah, I've been saying that.
Yeah, so there's a lot of things that are chewing into PayPal's business, but there should be a turnaround because as long as PayPal can just be more aggressive, they can come back, right? They still process a lot of payments. Like, apparently, they're being traded at 12 times earnings. So meaning, for every $1 you're investing into the stock today, it's going to take you 12 years to make back that money. But that's if the company is in a mature, or has already matured, meaning that, like, there's no more growth. So that means if you invest $1 today, it's going to take you 12 years worth of today's earnings, what PayPal is doing, to make back your $1. But
Right.
if we're factoring in that PayPal is going to at least 2x from here, that means for the dollar investment today, that's going to shrink down to 6 years. If we believe that PayPal is going to mature as a business, at being valued at 2x, like today's stock price. So if the company goes up 2 times the value today, and we invest based on today's like value of the stock price right now, yes, the PE ratio is 12 times, right? But if they're going to grow valuations by double, that means the PE ratio will, for us, if we invest today, will be actually 6. So, and if we goes up to maybe 3x, so if the company were like 3x from here, that means for every dollar we're investing today, we're going to be able to break even on our $1 investment in 3 years, every 3 years. So that means we're going to double our money every 3 years. If we invest the same dollar today, if they were to pay out, when a company matures is when they start paying out dividends. So if we get in now, if they 3x from now, that means all the dividends they're going to be paying out from a mature company, we should be able to double our money every 3 years.
Right.
So that's why it's like it's a good ad right now, but you want to add in, like, just slowly. So,
like, when you say slowly, like, how would you go? Like 10 at a time, something like that?
Yeah, like based on this, let's just see here. It's like $60. I'm probably gonna buy maybe like 5 shares at first.
Okay.
Right. I'm not trying to go too crazy because, like, there's other stocks that we have to be going into, right? Like, for example, Duolingo was one of the suggestions. When did I mention Duolingo? Hold on. Just to give you an idea, like we missed it. Where is it?
Okay.
Where are you? We got PRL. Do you see it in the chat somewhere where I put it here? The Duolingo mention here.
Chat. No.
Honest. I mentioned about Honest as well. Honest company, I know it's like value so low, but it actually made a little small move. Amazon.
this bull, like V-Bull, I think was.
Yeah,
I
Weeble
mean,
is in
the options are
there.
not doing good, but
The
the
stock
stock
is.
itself, it's not bad. I bought like 10 or 20 stock. That's it.
That's fine.
But I still have two contracts for $30.
Oh, really? Okay.
Yeah.
I guess I didn't mention Duolingo.
No,
Ah,
no, no, no. I think, I don't know whether it's in this chat or when we're talking, I remember you telling about Duolingo.
you do remember? Or you don't?
I do because it sounds so familiar.
Might be on the phone call. Ah, it's okay.
Yeah.
Because right now, Duolingo, maybe I can punch it in here. Let's see here. Duolingo. Yeah, on the daily, let's do the daily chart. Bruh. Why are you having a hard time loading up my daily chart? Hello, Duolingo. I'm looking for the daily chart. There's no way. So we've mentioned this. It wasn't during that. I think it was during the Honest Company. Where is it? Honest. November 19th. Okay. This is when I was looking at it. So November 19th, where was that? Right here. So this candle right here, November 19th. Do you see my screen?
Yeah.
So this candle right here. So if we bought at the highest point on this day, which is 177, it would have tanked if we got in that same day. But it went up. Let's see here. 177 to 210 is what? Percentage wise, how much is that? 210 divided by 177. So it's
15.
an 18, yeah, just under 19% return. Not bad. Right?
Pretty good. Yeah.
Not bad for, let me see here. 1, 2, 3, 4, 5. That's 1 week. Yeah, from the 19th. That's a Friday. So that means 1, 2, 3, 4, 5. That's 1 week. 1, 2, 3, 4, 5. That's so for 2 weeks and 2 days, you're up just under 19%. But if you will manage to buy at the bottom here on the Monday, which is this guy, then from $165 or $166, yeah, so 210. Best case scenario, you'd be up 27%.
Yeah.
So not bad for 2.5 weeks, right?
That's pretty good, yeah.
But you would only be buying like one or two shares at most, right? Because it was $175 US. So for us, that's going to be like just a bit over $200 for one share.
Yeah.
Yeah, right? So, and then the Honest Company also on November 19th. Okay. This is also daily, the 19th right here. Never mind. Move 10 cents. Okay. That's like 5%.
Still 5%.
Yeah. But
I
the
think
NB.
V-Bull did change go up like 15% or something from the day you mentioned.
Yeah, but once it crosses like over $10, like it needs to move at least $1 or $2 just to affect our option price because of I think it's called the theta part, because the theta affects the delta, and the delta will translate into the options price. If I remember, hold on, I wrote this down. One second here. Let me pull up
I'm more hopeful on the Halliburton company.
No, you can't say that because like, hold on here. So delta, gamma affects the delta price based on the column. So if gamma is theta is the time decay. No, okay. So it's the gamma price or the gamma that's going to affect our delta price. And then if there's crazy volatility, the vega, right? If the implied volatility is just at 1%, and all of a sudden we get a crazy bullish day of like interest rates, like so this Wednesday, if they're going to be cutting rates, whatever, and it translates into the market. So the vega price will also affect it'll reprice the theta, it'll reprice the gamma, and it'll reprice the delta.
Mhm.
So I'm like, oh, okay. Ba-da-da-da. Let's go back to gold here. I guess I could not get Mohammed on here. Where's it? XAU. Hello. Oh, there it is. XAU. Perfect. No, this is not moving as well as I would like it. Oh, ho, ho, ho. Oh man, gold. Bro.
Did it come down? Wasn't it like a
Yeah.
maybe not?
Yeah, it did. See?
Dropped a bit, right?
Yeah. This day right here was the Friday. They announced that the CP or the PCE, so with their core inflation, was actually lower than what they expected, and it crashed because it means that that we don't have a runaway problem with inflation, which means it should translate to maintaining the interest rate or even increasing the interest rate. But this is all BS of a move because at the end of the day, they're going to be cutting rates and they have to rescue the market because this whole entire market is based off of printed money. And when you have the Japanese market where they're unwinding, so the Japanese carryover trade, when the yield continues to climb on all their bond markets and everything, whoever has borrowed money on the yen and has brought it over to invest it into the Canadian market, European market, the US market, whatever market it is, where the interest rates was higher at the time compared to the Japanese market. Now it's getting too risky because the Japanese interest rate might go a little bit like far. Like it might be getting really pricey. So they're going to have to liquidate whatever they're holding in the US market, European market, or the Canadian market, wherever the market it is. They got to start selling to bring it back and pay off whatever money they borrowed in the Japanese market or other Japanese loans.
So the market's gonna go down if that happens?
Yeah. Yeah. But in order to rescue it, this is where the central banks, where the Federal Reserve has no choice but to start coming into the rescue because everyone's estimating is anywhere between $12 trillion to $20 trillion of asset that needs to be liquidated in all the markets in order to pay back all the loans that were taken out in the Japanese banking system or the lending system in the Japan market. Because imagine if you borrowed $20 trillion and it's 0% interest, like you don't have to pay a dime in interest. And you take that money and you just throw it into the government bonds in the US, and the government bonds were paying like, let's just say 9%. That was the interest rate. Right?
Yeah.
That's free, easy money. As long as the Japanese loans does not increase in interest rate, you're making clean, easy money, 9%. But let's just take that to the extreme. Let's just say you took that money and you invested into Nvidia because you have insider information, right?
Yeah, yeah.
Your money has grown and all that stuff, yeah, but you might have invested $100 million, but Nvidia went up 50x. So now you have $5 billion worth of Nvidia stocks. And it's not just you, it's you and your buddies that owns 5 billion times 100 of your buddies. So now you're at $500 billion just in one stock because you guys tapped into the Japanese cheap loans, right?
Okay. Yeah.
And you're like, you know what? I know I borrowed $100 million, but I don't want to pay, maybe potentially 5% on that money. So $5 million a year. So I'm just going to sell some of my US assets and just pay off the loan over there. But all that selling, like the market, the retail investors like you and me cannot absorb what they're going to about to sell. Right?
Okay.
So the Federal Reserve or all the central banking are going to step in and provide liquidity, i.e., they're going to be the buyers. They're just going to use it through an entity. So let's just say that TD has a trading arm. They need liquidity. They need money in order to help absorb all this selling that's going to happen. But they're just going to borrow the money from the central bank to be like, hey, there's going to be about $5 billion worth of stocks going to be sold that we need to transfer over back to the Japanese market, like paying off the debts there. But we can't absorb it because our books doesn't allow us to absorb $5 billion worth of stocks that are going to be sold in the next 60 days. So we need liquidity, right? So central bank's going to step in and they're going to start throwing in more money by claiming that, oh, you know what, we're just going to support the market and we're just going to provide liquidity, i.e. bailing out, giving money, whatever the term is. The net effect is that money's leaving a fake checkbook and it's just going to go into the balance sheets of all these banks, whether it be Goldman Sachs and all that stuff or a trading arm at all these banks, just to keep the ball going. So that's why when it comes to gold, any sort of major pullbacks you're seeing on gold and everything, it's going to eventually recover and keep going because there's so much money being printed. It's insane. It's exponentially growing, right? Like I predict in 2026, the balance sheet of the Federal Reserve is going to double. It's going to go from the $8 trillion that they have outstanding as what they lent out. They are going to double that in 2026. So,
okay. So, and that's not good for retail investors like us, right?
no,
Because
no.
that means it could, the market could collapse at any moment.
I know, but that's why when it comes to us getting into the silver, the physical silver, that's going to be the easiest 2 or 3x play going into 2026. It's going to be the easiest. Like you don't even have to worry if when you're going to make that money because it's just if all else breaks, right? If the whole market breaks, you're just going to sit on silver because it's going to go very easy from the $56 an ounce to $112. That's a lot easier to 2x than to 2x gold from $4,200 right now to $8,400. It will happen.
Yeah, but the thing is the liquidity, right? Let's say it doubles and we want to sell it.
We're not.
No.
The minute money goes into the physical silver and everything, you're going to carry that until you die. It is only meant that you're not putting in every single dollar you make because like you said, you need liquidity, right?
Yeah.
You're only going to be putting a portion where it's you're locking this up. You're putting it into this and you're never cashing out unless it's an emergency that Your TFSA is drained. It went to zero. Your options, you went too crazy on the options trade and it went to zero. If all else fails and everything, then yes, cash out your silver. Even if you maxed, like you, before you be cashing out your silver, you want to be using your line of credit, your credit card. You want to use everything else before you touch your silver. Because the way that the market's printing dollars right now, how much debt is being printed every single day worldwide, your interest that you pay on the line of credit or even the credit card is not going to outpace how quickly silver is going to go. You will see a 50% return on silver in a month, but you're just going to pay at most 22% on your credit card in a year, right? Silver can have that
Okay,
done
that
in a
makes
month.
sense. But okay, then you said you keep the silver until you die. Then what's the point if I can't, benefit from holding silver?
So
You know what I mean?
yeah, so here's the benefit. You are going to witness another one of my tragedies here, okay? I've been buying silver since 2008, right? And then during the lockdown where I had to shut down the business and money was extremely tight, there was a buddy of mine that was looking out. I thought he was looking out for my best interest, right? But he, lent me money. He helped me hustle some scooters and everything. He was trying to help me keep busy and pay just to keep my mind out of that desperation. So he was trying to keep me busy. So I thought he was a good friend of mine until he saw an opportunity to take advantage of my situation where I'm like, buddy, I kind of owe you some money and everything, but the only thing I got is just my silver stash, right? But if I'm going to let you hold my silver stash and everything, I just want you to hold it as collateral, and I want to buy it back to whatever price we agreed on, right? So at the time, I had 575 ounces of silver. Okay.
What?
And the average price that I paid on that silver was $18 Canadian. Anywhere between $14 to $18 Canadian. That was my average price. Okay. Canadian. And this guy disappeared when I mentioned that, like, hey, I'm ready to give you back the cash so I can get back my silver, right? Gone. Lost contact, he's gone. Right? But whatever my debt is to him has been settled. I don't owe a penny. It just sucks that I'm not able to get back that silver. Right? So 575 versus today's price, which is $87 an ounce. That's $50,000 of silver.
Jeez, yeah.
Okay. And I paid at most $18 an ounce. So I had 10 grand of my own money. That 5x'd since 2008. And if I held that same 575 ounces going into 2026, and I'm telling you guys it's gonna 2x again, that means my 50 grand going to 2026 will be 100 grand.
Yeah.
Right? But if silver goes to $1,000, because silver is usually trading at least 18 times like at a discount compared to this gold price. So if gold goes to $6,000 in 2026, you divide that by 12. Oh, sorry, you divide that by 18. So silver should be at $333 US, which in Canadian dollars would be $460. So $460 at 575 ounces that I had. Me going to 2026, my silver should be worth $265,000 Canadian.
Oh my God. Okay.
You see what I mean? Like you just buying. The reason why we're going so heavy in the beginning of the year is because it's like we don't know when that crazy 20 or 30% jump is going to happen. I would rather have my money in and pay a little bit like too much than try to time the bottom and throw in all my money in.
Yeah.
You know what I mean? Just scale in. Like whatever that amount is, scale in.
Yeah, I get it. Yeah.
Right? because I'm pissed. 575 ounces. I was
Yeah, that sucks. Yeah.
okay. And buddy, my silver would be worth more because of the date that it was stamped, because I had the majority in coins, individual coins.
Mm.
And the premium is even worth more when your coins are even older. So I had coins that were 2009, 2010, right? So people pay an extra $1 or $2 or even $5 extra per ounce because of how much older the coins are.
Right.
So anyways, just I don't want to dwell on too much, because it's like, if it wasn't for the guy that was, lending me some money here and there and helping me out and all that stuff, like, I would probably be in a worser mental state. But to see him run away because I mentioned that, like, I'm ready to take back my silver and everything, it just shows that, like, oh, okay, this entire time you weren't really a friend to me. And if this guy happens to be watching my streams and seeing this right now, like, if you really want to redeem yourself, give me a call, buddy. Right? You know what you did. But if not, if you want to be this petty and just want to hold on to my silver, thinking that, like, this is the hill you want to die on, okay, by all means, like, the universe is going to you're not going to get to keep it. I'm going to tell you this right now. It may not come back to me, but you're going to lose it down the road based on how the universe works. So hopefully this guy is listening. Let me see here. Gold is not, like, holy crap. Like, I don't know if you saw gold, but gold did do a crazy move. So on the 5 minute here, it went from, that's not much, 50 pips, not a big deal. Let's see here. So, oh, someone did come on. Hello.
On a stream?
Yeah.
Oh, fuck, man. For a moment, I forgot you were even streaming.
Yeah. But it's nice. Trying to, stay consistent with the streaming here. But yeah, so 575 ounces. Now we're going to rebuild it. If it's anyone that's like, man, on a lot of these chats that I'm on, Facebook chats or Reddit and everything, like, I know a lot of it's like bot, just putting up random posts. But if 1% of those people are replying on those posts that are just very tunnel vision of, like, seeing what the whole entire market's doing. So right now, like, you're seeing how many people are complaining about the rent situation here in Toronto, right? And people are saying that, like, oh, this new bill that's passing, it's going to create a whole lot of problems when it comes to rent control, being an issue and everything. And I'm like, guys, if it's a free market, we should not be rent controlling, because rent controlling just distorts the actual real market, which is, the problem is not high rent. The problem is that your job, salary, and everything is not keeping up with inflation. Everyone would not be complaining about a $3,000 one-bedroom rent if your income happens to be $180,000 a year.
That's right.
Right? Like, who cares? Because your income is keeping up with everything else. But no one's complaining that, like, oh, you know what? Grocery prices are all up and everything. Why isn't the government freezing on those prices? They have the power to rent control your rent. Why can't they have the power to dictate the ceiling prices for all these other items that we buy on a daily basis? This is essential. They've already classified as groceries as an essential service. So during an emergency lockdown, grocery stores cannot be closed. Did you know that? Yeah, it's part of the Canadian Bill of Rights, and it's part of the Charter of Rights and Freedom, right? All that's part is an essential service. It cannot be shut down. So if that is so essential and everything, why isn't the government placing any sort of caps on prices on your groceries? Oh no, that's a business.
Yeah.
Okay. But being a landlord's a business. Everything, all the supplies of like all the housing that has built up until now was for profit. And all of a sudden they're like, oh no, government should be controlling like the housing supply. I'm like, buddy, I have friends that live in Singapore where the government actually controls all the housing supply. And it's even worse for local residents. They cannot own any properties in Singapore. It is so expensive. So this whole conversation of people talking about high rents, this and that, the easiest fix that what we can do is go into 2026 and start buying up silver. That's the only thing that people can do to protect themselves, because it's going to get a whole lot worse in 2026. A whole lot worse. Right? Like,
Yeah, that's scary.
it's tough. It's tough right now. And I'm trying to just share my piece on all these posts. I'm like, guys, if you need to voice your opinion, just get it out there and all that stuff. Yeah, do what you need to do. But the next day, when you wake up the next day, figure out what you need to do to make more money, cut your back on your expenses, learn how to shop for coupons and this and that, how much silver to buy. So, okay, this is great. I love the questions. Arun, we got a person's asking like how much silver should we buy? So, like you said, Arun, like you're wondering, you're talking about liquidity. It's like I want to invest into silver and then I want to eventually cash out. You don't want to cash out. The whole point of silver investing is just to preserve your hard labor. So, a video or
so it's essentially like owning a land, like
No,
you don't sell it, but it's there.
Yeah. So in case I'll explain it to you again, Arun, just in case if someone's going to be watching this later on. The whole point of working, trading hours, or trading your labor for this fictitious thing called money. The definition of money is supposed to be a store of wealth, right? And you and I discussed this earlier, like off stream, where your 1 hour labor today should never be devalued in the future. So what's the difference between your 1 hour labor today versus you working the same 1 hour labor next year? Where we place the actual value of labor is based on what that 1 hour can translate in terms of what you can buy, which is my 1 hour labor. I should be able to buy, 5 apples, a bag of rice, whatever that 1 hour is. You should be able to maintain that same purchasing in the next year and forever, because 1 hour labor is 1 hour labor. But based on today's thing called money, like cash, it's distorted that value of 1 hour labor. And it's like, no, labor should never be devalued. It should be able to translate in terms of what you're able to buy in whatever year. So gold and silver is the best place you can store this thing called store of wealth, because I was talking to Miles. He was back in 2002. He was working at this is before your time, but there's a grocery store called Dominion before Metro bought it out. Dominion was paying him $6.25 an hour, and he was only working 16 hours every 2 weeks. Based on gold prices at that time, if you were to ask his employer to be like, hey, you know what, don't pay me $6.25, just pay me in gold, technically he would be paying he should be receiving 12 ounces of gold per year, right? But let's just say he only worked just that 1 year. So you got 12 ounces of gold, right? His $6.25 an hour was just making him just under $5,000 a year, which is 12 ounces of gold. Now, for him to get paid the same amount, because we're trying to value his labor, that 12 ounces of gold today is worth $60,000 in Canadian dollars today. Are you telling me that you can find a part-time job that'll pay you $60,000 a year by working 16 hours every 2 weeks? You can't get that. But that 12 ounces of gold that he if he would have held it from 2002 up until now, whatever that 16 hours biweekly checks he was getting, whatever he was buying back in 2002 to 2003, he can still buy that today. Those 12 ounces of gold, if you were to cash it out today based on today's price, he can buy the same amount of rice, the same amount of like Taco Bell takeout, the same amount of McDonald's takeout, whatever he could have bought with that $5,000 back in 2002, 2003, he can buy it. He can still buy that today, even with the shrinkflation.
Right, yeah.
You know what I mean? Like, you know, the stupid, like I'm looking at the trick-or-treating, like a box of chocolate I'm seeing here. I don't know if you see the little Snickers. Back in the day, that was actually double the size. But this shrinkflation, everything, it's like, oh, no, don't mind the kids here. So to answer the question, everything, if you're going to be buying silver, you want to be buying just enough based on your income, all your income sources and all your monthly expenses. I would probably be allocating about just around 10 to 20% of your total net income, like comfortably into silver going into 2026. That's where I would comfortably buy, because it's not enough money that's draining out of your monthly income to be like, oh, you know, I'm going to be a little tight. I got bills to pay, or my electricity bill might be a little bit higher this month, or, you know, I have an unexpected expense where my car broke down or things like that. But just allocating 10 to 20%, it should not affect your day-to-day expenses.
Yeah, that makes sense. I guess the next question is where to buy the silver from.
Well, for you and me, we have a dealer, like a Royal Mint. So I don't know where you're at, Asia 7672, but if you're in Canada, or especially up here in Ontario, just make sure that when you go to the Royal Canadian Mint, that it's an authorized dealer, and they have a big list of the authorized. Yeah, actually, no, let me just go on the website right now. Hold on. Canadian Royal Mint. So this is the website. We go here. This is how we are going to check. Find a store. So Winnipeg, where are you? Bullion dealers. See right here?
Saying that the dealer should be authorized by this Canadian Mint.
Yes. So you'll see all this list here. So you got Alberta and everything. So you'll see this.
Mm-hmm.
We are going to this thing called Guildhall Investments. So Ontario, where's our guy? Where'd you go? This Century Stamp is in like Square One at the time, and then they moved down to Lakeshore. This is where I bought most of my stuff when I started. But then he got really expensive and got, you know, really, really cocky to me. So I stopped buying from him. Right here. See? This is us.
Okay.
So they're here, and they're in Markham.
That's like a minimum purchase record, right?
Yeah. There's definitely a minimum purchase. Oh, TD is part of the authorized dealers. Oh, okay. So we have another one in Mississauga. Oh, this place has a couple branches. Okay. So this is like one check mark of like making sure you're buying. But again, these dealers can potentially sell fake silver as well, or say, like, you know. So if you want to go through the hassle of, like, you know, drilling a little hole in your coins or in the metal just to make sure it's silver through and through, then do that. But for now, hold on. Is it worth getting like collectible silvers? What do they call it again? Those collectible silvers, new miss. I cannot pronouncing this right. The thing about the collectible silvers based on, so this other guy that I follow, his name is Mike Maloney, big silver and gold guy. I've been following him for such a long time, and I think he's probably going to die before all this crazy crash in the silver and gold market is going to happen. Because when I watched him, he had orange hair, and now when I see him now, he has nothing but white hair. And I was like, oh my God, has it been that long? I've been following silver and gold. But yeah, Mike Maloney is a guy that I usually listen to, and he discussed about trying to collect collectible coins. in a crash, in a market meltdown, the collectible portion of your silver and gold coin does not matter. No one cares during that moment. All they care about is like how much does that silver is actually, like how much does it weigh and how much is it actually worth. And
Mhm.
I would rather pay for, so right now a silver coin goes for $87 Canadian an ounce. But if you're buying the collectible version of the same weighted amount, which is 28 grams, you might be paying 120, 150, maybe $200 because of the collectible value on that. And I'm always thinking about, if I need to cash this out, you will have more during a crisis, and everyone knows that, like, yep, cash is trash. I don't want US dollars. I don't want Canadian dollars. I don't want none of that. I just want silver. They are not thinking about, oh, the coin that I'm about to buy from you has a collectible value. They don't care about that. They just want the silver.
makes sense.
So I would stay away personally from the collectible coins. But if you can manage to get a cheap deal where you see a collectible coin, it's 28 grams, you know that the spot price that you can get this for is $87, and the person saying, yo, just give me 90 or 95, I'll buy that. You get the raw price on the actual silver itself, and you get a little bit of like a second play, or the second investment, which is the collectible aspect. So who knows? But if you can come across that deal where you know that it's being sold close to the spot price, by all means, buy that too. But a lot of those coins can be faked, so that's the problem. Now I don't know
Even
if
if they're certified, eh?
I'm sorry.
Even if they're certified by those Royal Canadian Mint.
Yeah. I don't know if it's being delayed from the chat, because like I know there's a 30-second delay from what we're discussing versus what's actually translating into the chat or into the stream. But
Yeah.
but it's Asia 7672. Well, I think it might be Shelly. Might be Shelly. If it's Shelly, I don't know why you don't come on the Telegram. So at least it's like real time talk here.
See her online. I mean, I don't see you online either. So I guess it doesn't matter.
Yeah. So right now, like we have to maximize and leverage like 2026.
So when are you going for the first purchase? December or January?
It's going to be in January, because we have to place the order and have to set aside the dollar amount. Hello.
Right, yeah.
Can you hear me? Did
Yeah.
someone call my name?
Oh yeah. See, I knew it. I was like, all these questions, like it sounds so familiar.
All these right questions.
Yeah.
I wanted to give you the viewer
Oh yeah. That's fine. Just
because I can't do both. I'm like driving.
I know. Like Arun was telling me the same thing. It's like, oh, okay, that makes sense. It's better for you guys to actually come on Telegram first to discuss and have it on the recording than you guys being on the actual the stream, because it doesn't create a lot of like discussion. Uh-oh. What's going on here? Yeah, so silver. This is going to be brutal. This is going to be rough. Oh my God.
So silver went up. Because last time I checked it was 85. Now you're telling me it's 87.
It's 87 on the spot price, but where we're buying at, it's going to be around 85, 86. That's based on that price on that day. But let me just see what the price is now on silver. What was it called? XAG? Yeah, XAG. Silver price, yep. It peaked at $59. Oh my God, that means silver went to $90 Canadian. Yeah. That's why silver is going to be the easiest play in 2026. I am hurting. But
Are you sticking to the 100 ounce?
well, with the guy at work now, he can do the 100 ounces himself. So I was figuring out that maybe we can go on the next the next tier. Hold on here. Hold on, let me see here. Let me just see. Let's see. Can we buy silver? Where are you? Silver. Oops. Yeah, buy silver now. Let's see what the bulk prices are at. So 500. So that's 25. 500. 100. 100. 200 ounces. Okay, so there's a 200 ounce version. It's $17,397.39.
Oh,
Okay, that's priced at $86.98 per ounce. So based
Canadian?
on, hold on here, multiply that by 100. So the 100 ounce pack, right, is priced at $8,731. But if we get the 200 ounce pack, right, you guys are gonna laugh because it's not really much savings. We would be saving 32 cents an ounce.
oh,
Okay.
wow.
Yeah, because silver is already trading so close to the spot price. So that's why. So at $57 at the 1.4, yeah, they're really marking it up by like $7 an ounce, which is a 9% markup. So we're really asking the business that, like, hey, you know, sell your stuff at a 5% markup. So yeah, we're definitely squeezing them. We can get more cheaper on this if we buy silver from a different country. So like Australia is one of them. Silver Britannia, is that London?
Britannia.
Let me see here. So 21.96.38, divide that by 25. No, it's still roughly the same price. Yo, time has changed on this. But yeah, the 200 ounce, we can't really break that up because it's one bar that is 100 ounces.
Oh,
So someone's going to have to buy 100 ounces, which is probably the buddy that I have. He's probably going to commit to having one bar like that, just to get a better price. And then it's 5 pieces of 10-ounce bars and then 50 coins.
is it better to have coins or bars?
Both. Ideally,
Oh.
you want to have them all coins, right?
Okay.
Ideally. But when it
Points
comes to,
of 1 ounce each.
yeah,
Yeah, 1 ounce. Yeah.
like if you can get silver dimes, that's also another thing. Because you got
But
to think,
isn't it higher premiums on the smaller ones?
yeah, because it's cheaper to purchase. Right? Not
Oh.
everyone's going to be able to drop money to buy 100-ounce bars.
Right. Oh, I see what you mean.
Yeah, so the silver dimes are going to have like instead of being like we saw a 9% markup on the dimes, it might be like 15% markup.
Mm.
But in an event where people start to lose faith in the actual Canadian dollar or US dollars, they're going to be like, no, just give me silver. I'm like, but I'm not going to give you 1 silver ounce for a bag of chips. Right?
Yeah.
So it's going to go down to silver pennies, silver dimes, silver nickels. It's going to come down to that.
Yeah.
What is going on with gold? This is like really sporadic. It's going up and down like crazy. Hold on. Wait a minute. Are you on your way home right now?
Yeah.
Because we're about to order pizza and everything. Like, are you too far now?
Oh no. Yeah, I'm already close to home.
Oh, you filthy! Oh, I can't even say that on stream.
Not allowed.
Oh man.
That's right. You gotta show me some respect
Oh yeah?
up in here.
Yeah? This is only on
That's right.
stream. Okay?
Listen. Okay? I'll take it.
Yeah?
Okay? I'll take it. Okay? Put
Arun.
you on a leash.
Arun, I'm gonna need you to, really.
Arun's my friend.
No.
Okay?
Arun has used that backhand many times. Okay? So trust me, like, he's not afraid. That backhand is smooth. Like, it just goes like that a lot.
Oh, you would know.
Dennis knows, eh?
Yeah.
You,
Okay.
yeah, you would know, eh, Dennis? You would know.
Holy
See, because he's my
moly.
friend. I don't know that.
You're gonna find out. Okay. Okay, you're gonna find out. Trust me. But Muhammad knows. He knows this a lot. Okay. He knows that from me a lot. Okay. But this guy, where is this Muhammad? Huh? Where'd he go? Is he actually taking a nap?
Was he on?
He's supposed to be here,
Was
but
he on
he's
earlier?
taking a nap.
Oh.
So apparently, Arun, like, we're actually taking that job out in Vancouver.
Oh, really?
Yeah.
Oh,
Nick.
for real?
Yeah, Nick sent the email saying that, like, oh, we're actually, this is starting to look real. And he's just confirming the volunteer again as to who wants to go out there and what are the actual dates that people want. Only one guy.
Are you going out there?
No, I can't. Right? Like,
Yeah.
it's not worth it for Nick to send a guy out like me out there just for 2 weeks. He needs guys that are going to stay out there. But if worse comes to worse and he needs like the extra hand and everything just to close out, and 2 weeks is all he can get out of me, then chances are he's probably going to do that. But based on the amount of people that are volunteering, I don't think he needs me out there.
So, guys are volunteering, you think?
Yeah. So we have like Sandeep, Graham, Mike, Jack. Graham, Jack, Graham, Jack, Mike, Sandeep. Who else? Huey's already out there.
Yeah, man. Like, Daz, yeah. Because, yeah, as you know, no one from Daz is now willing to go. So
No, it's not lucrative.
they're not even paying me any premium at all. It's just the regular price and per year.
What do you mean? It's an automatic 15%. What are you talking about? Remember?
Not even that, because I just got my first paycheck for my first week in Vancouver. There's nothing at all. It's just per diem for 5 days worked. That's it.
Oh man, this is not a good look. Oh boy.
But I'm gonna try to make an appointment with Jordan to discuss it sometime this week.
Yep.
Yeah, because then it's in any way, it doesn't make any sense for me to go out there.
No, you shouldn't go.
Yeah.
It doesn't make any sense. But it's just maybe because it's like priced really tightly and everything. But I'm like, man, if Jordan's listening to the stream, right? If he's
No,
listening,
the thing is, like, he didn't even tell me that I wasn't gonna get paid, right? So I was under the assumption, like I told you, that the last time it was there, and even we had a verbal agreement during our review this June.
yeah.
Out of nowhere, when I look at my paycheck, it's nothing. And I talked to Ali, and Ali is like, "Yeah, there's no bonus or anything. It's like
Wow.
there's only per diem."
Wow.
Yeah.
You got to pay your guys something if you need to go out there and work. You know what I mean?
Yeah, it's even less money if you think about it in a way. There's no zone pay because in Toronto you get $20 every day, $21, and you get what regional benefit.
No, man,
It's nothing over there. Yeah.
this is not good. Can you actually see this on stream? Oh, thank God. I'm looking at the pizza menu right now because I'm trying to figure out what we need to eat for dinner tonight while you're still waking up for breakfast. Oh.
Yeah, it's 5:48. No, yeah.
Dude, I appreciate you coming on at least like just once. I don't expect you to be coming on consistently while you're in India, right? But this is
I
great.
mean,
Oh, snap,
is this
you're
the
in
time
India?
you're going to be streaming?
This is roughly the
Yeah,
time they're
I'm
going to
in
stream it.
India. Yeah.
Oh, snap.
Yeah, I know. Oh, you want anything from India? Because it's like anything like when it comes to spices and everything. Because he's saying that it's dirt cheap over there. Fresh
Yeah,
spices.
it's more. Yeah,
Oh,
it's
fresh.
more from. What do you say?
Is
Ground
there
to
some
the table
saffron?
kind of
I
thing.
wouldn't mind some saffron.
Whoa! Don't be going for the premium stuff. Yo, man, like
Listen, you.
I don't know.
I don't know if it's
Saffron.
premium over there. What if it's
What do you
like
mean?
just people growing in the backyard? I don't know.
Yeah. Oh yeah. So gold is not premium over there, right? Like gold is cheap in India, right? Saffron. Like, what? Come on now.
It sounds like it. People just be buying gold all the time over there.
No,
Yeah.
don't. But no, like if you want some pretty good spices and everything, like cardamom, cumin, or
Black pepper.
Black pepper.
This kind of stuff.
yeah, like load up.
Saffron, to be honest, no,
Okay, alright.
I don't know. Yeah, I should ask my parents. That's a thing out here.
Holy $50 for 3 pizzas, man! I'm not getting
Wait,
paid
you getting it
enough.
from Pizza?
No, I'm getting from 1+1 Pizza.
Oh,
Pizza has a deal right now, but I refuse to hand another $1 to that company.
I do not like Pizza. I haven't had Pizza in forever.
It's not bad.
I
Just
mean, yeah.
yeah, or that's your go-to, right?
Not every day. But
No, but I mean, like,
it kind of tastes okay after the next day when you're really hungry, when you don't have money to buy stuff.
oh yeah.
Yeah.
What was it? Okay, I'm gonna focus on this takeout order and everything. We're gonna try and maintain this streaming situation when it comes to just discussing everything in general. But I don't know when you started tuning in, but yeah, PayPal is the play to scale in. I'm probably going to be buying 1 or 2 shares tomorrow morning. So consider buying that in your portfolio.
Yeah, I might start building up. But don't go crazy, eh? Like, not like 50 at a time.
No, because there's going to be more plays coming out. Like we still have to watch out for Amazon because Amazon is a long-term play, but I'm waiting for it to come down, right? Because they're going to open up the grocery section of their business.
Yeah.
And
What about the Carvana puts? It's not worth it, eh?
no, because they
Because I
already
was
factored
looking
in
at-
the
Too expensive.
yeah, that's the theta pricing. like the implied volatility. That's the Vega. So
Oh.
Vega and Theta is what's killing the premiums on that. 'Cause that like it will give you wild swings. So it's just better just to own it up straight up.
Are you trying to do this every night?
Yeah, and instead of me calling you guys individually, give you guys an update, this is just a lot easier to discuss, whether from being tax structures, which you kind of missed in the earlier part, because I'm still trying to figure out that whole cash damming, and it makes sense for you
Yeah.
to start cash damming this as well. To talking about the real estate thing, because we're waiting on that, and then just investments in general. If everyone, just looks at everything, whatever you're looking at. Like, for example, you mentioned, what was the stock that you were mentioning earlier today?
Oh,
Netflix.
Netflix.
Yeah.
Mm.
That was random. Netflix buying Warner Brothers.
But
Yeah.
didn't you see like Paramount offered a 1 or 2 billion deal to, like a counter offer?
Paramount? No, there's no way, because like
Yeah, I just saw it today. Like they offered, so Netflix put an offer for 82 billion, Paramount put a counter offer for like 1 or 2 billion to get the Warner Bros.
no,
I don't know
I
if
think
it went through or anything.
no, I think the deal with Disney is that it's not an all cash offer. So what they're doing is that they sold it for whatever 84 billion, but let's just say $20 billion of that is Netflix stocks, right?
Oh,
So Disney is like, yeah, we might have gave you the Warner Brothers, but if we get $20 billion worth of Netflix stocks and you guys are able to turn around the whole asset of Warner Brothers, then our 20 billion might be worth 40 billion because Netflix stocks is going to keep on climbing.
right, yeah.
So they don't care about what the offer is from Paramount, even though it's more, because like it's all strictly cash. They would rather have a cash and stock like mix. And I guarantee you, the people that own Netflix are gonna get that in their proxy when they get this little piece of mail to choose. Like, do you want an all stock? Oh, sorry, not Netflix, like Disney. Disney stock holders are gonna get a letter saying that like there's gonna be a mixture. Do you want purely all cash, or do you want a mixture, whatever? So they're gonna get this little thing to vote in as to what they want to do.
Right.
Yo, this streaming.
They even had a thing. Netflix had a deal with them that if the deal doesn't pass through, they're gonna pay them $6 billion.
Yeah,
Oh,
that's a big penalty.
Yeah.
Oh, the boy.
So they're super confident that it's gonna go through, I guess.
Yep. That means Disney is gonna go down, Netflix is gonna go up.
Yep.
But I ain't paying.
that means Fubo's gonna go down more.
Actually,
What is it?
has Fubo been going down?
Yeah, it's at 270s now.
Oh, back in the $2 range.
Yeah.
Oh, I might consider going back in
What?
You think
Fubo.
so?
Oh,
Yeah, I might actually buy 100 shares tomorrow on Fubo then. Let's take a look at it right now. Fubo TV. Why? God, that's a nasty chart on here. Oh, was it really that Netflix announcement destroyed this stock?
I mean, not really. It's been going down since last month.
Yeah, it's getting close. You know what? I'll put I'll watch at $2.28 for me to buy my first 100 shares on it. Yeah,
$2.28.
yeah, around there when it gets there. Because one of the guys I'm watching everything, like he still has like almost 80 grand in Fubo right now.
wow.
Okay.
Yeah, but he has it at a higher price. Like he has it like in the $4 range.
Oh, so he's losing.
Yeah, but he believes in Fubo a lot because there's a subscription base, and they're just gonna get more creative with their product selection.
Mm-hmm.
So he believes in the turnaround of this company.
Mm.
I'm like, okay, I like your due diligence. It's an investor account. But anyways, guys, I have to hop off.
Yeah.
Arun,
All right.
if you happen to be up again tomorrow, that would be great. If not, no hard feelings. We'll keep this consistent when you come back from India.
Sure, sounds good.
All right.
All right.
I will catch you guys later.
All right. Later, guys.
All right.
Later.
Later, guys. Bye.